Sam just disappeared on us right in the middle of it. So welcome back. It's Tuesday. We had Sam Rubin here with us, but she disappeared. She'll be back in 2 seconds. Going over a subtle, small topic tonight relative to the scope of most loans that are done for VA eligible borrowers, but an important one because I would say I don't do hardly any of these, but I have been around 1 to 2 situations where people got way into the process, and it was with a guard, National Guard or Reservist who believed they were VA eligible and didn't do the legwork on the front end and made it real difficult towards the back end of the transaction. So we are going to go through that detail with 3 of the vetted pros tonight that know all of the details on Guard and Reservists and are going to walk us through those guidelines. So I've got Joy Francisco, a loan officer in El Paso, Texas, Michelle Dugan in Madison, Mississippi. I don't want to say the wrong one. It's Mississippi, right? It's not Missouri. Okay. I look at MS and I go, it's Mississippi. I got it. And Sam is also in Texas and will be back with us here in a minute. Michelle, why don't you take the pleasure of walking through what's different? What is different between a standard veteran coming in and saying, hey, pulled my certificate of eligibility, I'd like to buy, and a Guard or Reservist? I can say from my perspective, the few calls that we do get, I got one earlier this week from a gentleman. He goes, okay, I'm pretty sure I'm eligible, but I don't really know. Where do I start? What do I do? How do you have that conversation if a Reservist or a Guard member reaches out and starts asking you about their eligibility?
So typically, we are going to assume that the Guard member is likely going to need 6 years of service to be able to qualify, unless they have been activated in the past for 90 days or greater time period. There's a lot of confusion typically with the Guard members because they may have a DD-214 or feel like they've been activated for certain different projects, but if it's trainings that they were activated for, those are not going to count. Like your initial time when you go to boot camp and all of that, that does not count. So it's just it's not quite as clear, I guess, when you're in the Guard as it is when when you're in the Army or the Navy or something like that. So it is a little bit different. Now, another thing that can be a little bit different is that typically we're going to go in. I always like to get my certificates of eligibility before I tell somebody that they are eligible to buy. And the reason being is that you don't want to just assume, especially with your Guard members, that you're going to be able to get that certificate of eligibility. And for most of them, when you go in to pull their certificate of eligibility, it is not going to pull in automatically. So there's going to be additional documentation that you have to get from them to be able to pull that certificate. And you're going to have to, you're going to need a point statement. You're going to need different documentation than you typically would need for most veterans. So it can take a little bit longer to get the certificate of eligibility up front. So I always let them know, like, I'm going to put you through the ringer a little bit so that we can get this in, but I'm doing it for their benefit because there are so many places that will say, oh yeah, you've served for 8 years. You're going to have, plenty of time in, you're going to be eligible. But if they did not get all of their actual points that are needed and required, then the years that they served may not be viewed as creditable years. So there can be a lot of confusion over it, but if the loan officer knows what they're looking for, which everybody in vetted VA definitely should and does, so they're going to be able to help walk them through that a little bit easier instead of it just kind of being a surprise over what's needed or getting under contract and then later finding out that you don't actually qualify for a VA loan because you don't have the right time of service in. So yeah, I like, it's conversations that you have up front to make the process a whole lot easier on the back end. And it takes a little bit more work, but it's worth it.
And every time that I've come across a situation where a reservist or a Guard member is in trouble at the end of a transaction is because it wasn't done. The legwork wasn't done up front. Just go get the certificate of eligibility. And part of it was part of what you explained there says it's not quite as simple. I don't know what you guys see in your experience, but would you say more than 90% of the time with a veteran, if we go into the automated certificate of eligibility, you get it? I don't know if it's 90 or 95%. Occasionally we'll have a problem with it, but most of the time it's push a button, boom, we're here and we're good and ready to go. But with this situation, you're saying much more likely to have to get the point statement and the DD 214, go through all of that fun stuff.
Right.
Some of these questions kind of come back to just experience, and it doesn't come up as often. So any of you guys feel free to jump in and answer on this. But you had mentioned a couple of things that can expedite the 6 years, whether they were sent on active duty. How often, Joy, in your experience, have you come across people that are eligible before the 6 years, or is it more likely that after the 6 years of service, we're going to see them eligible versus someone that got deployed for a period of time and was eligible sooner?
So Michelle mentioned that it has to be 90 days of active duty for you to be eligible before that 6 years. But the reality is it can be 90 days of active duty, but only 30 of those days have to be continuous. So if you have 30 days of, let's say, Title 10 orders helping with some federal natural disaster, right? Or even certain Title 32, those are state orders, certain state orders for 30 days, then that would make that period eligible for those 30 days. And then those other 60, maybe it's 3 weeks here, 2 weeks there, 3 weeks there. So that determines eligibility as far as those 90 days. Now, what's important to remember, this isn't your AT, or this isn't your 2-week training in the summer. This isn't your initial training, your AIT, MOS specific schools or anything. This is called up on orders, Title 10, Title 32, and serving some mission, right? Or being deployed. So we see more of our veterans and service members who are in the Guard right now, that their COEs will come up because a lot of them have been deployed. And so it's a little bit easier than that. But what I see is newer Guardsmen coming in, maybe they only have 3 or 4 years in. Maybe they haven't been on a deployment yet. Maybe they haven't been called up on any kind of orders, Title 2 or Title 10 or Title 32. That's when, like, okay, we need your DD 214. We need to get a statement of service, get all those line items in place. Because the cool thing is even if you don't have a statement of service, if we have your DD 214 and that DD 214 proves enough time for VA entitlement, you could still be in the Guard, but we wouldn't need your statement of service because your DD 214 covers the eligibility that we need. So it gets really nuanced for Guardsmen because, just for example, Title 32 orders are state orders. There are certain state orders that do not qualify for VA eligibility. There are certain state orders that do qualify for VA eligibility. It's very nuanced. So what you need to know about this is that at the end of the day, the regional loan center has the final say on what is eligible and what is not. That's what you need to know. All right. Sorry, I talk a lot too. I love
No. This is you've said several times it's nuanced, and it is. A lot of the stuff that we talk on here, it's guidelines, but it's black and white. Okay, here's the guideline, here's the black and white, here's the exception, but this is detailed, and it's not something that comes up as often. So what does that process look like? Or when you initially meet with the client, you're basically essentially saying, get me the statement of service, get me the DD 214, then we're going to request upload through WebLGY and request it, or what does that process look like?
For me, if they have a DD 214, I look at the DD 214 first, because if we can prove their service, then I'm not going to bug them to go to S1 to get a statement of service. All right. Because if they're in the Guard right now, they can go to S1, get their statement of service, and it's all good. Right. But more often than not, there was a time period in wars past where there were more reservists in National Guard than there were active duty. A lot of our Guardsmen have been deployed. A lot of them have served on federal orders. So their DD 214 more than covers that eligibility. For our newer Guardsmen, we're going to look and see, oh, it was only initial training. Okay. Now we're going to need that statement of service to upload and get our COE. Or here's the other thing. Maybe they know they have never been activated. They have never done anything. They've had credible years. We'll talk about that, but credible years in the Guard. We know they're not qualified yet because they haven't had those 6 credible years. Maybe they've only had 3 or 2 or 1.
Perfect. We talk a lot on the show here. Chris created the group to have vetted pros, to help veterans make sure they're getting accurate, honest answers to everything. And I would say this is probably one of the more unique areas of all of VA financing, where if you're getting with someone who says, yeah, I do VA loans, you can get the wrong answer. So this is an important area where you are making sure you're working with a vetted pro. Sam, we lost you there for a second at the beginning, so I don't know how much you heard of what Michelle went through with us, but anything to add to when you're working with guardsmen or reservists that you like to go through?
I will just say that a lot of times, because when we're active duty, our time doesn't automatically go to the VA, to make sure that they reach out to their HR reps or admin reps to make sure that they're inputting their time into the system that they're supposed to input it into, because we get a lot of guardsmen and or reservists that get their certificate eligibility back that states they're not eligible when they should be. And now you got to go back and find your RPAMs or your NGB 22s or 23s, and you've been out the guard for 6 or 8 years and may not have that contact still. So one little thing that I would like to give to people out there is, if you don't have a relationship with the people that you enlisted with or the units that you used to be a part of, reach out to a recruiter office. Many times they have a certain system that they can look up a lot of information in that they have access to, that they can go in themselves, or they can reach out to someone within the battalion to be able to pull up your information from prior years. So reach out to your closest recruiting station and see if they'll be able to help you get that information if you don't have a contact point for your old unit.
Perfect. Before we move on to kind of the income piece for people who are still in the reserves or the guard, anything, Michelle, Joy, you feel like that we've kind of left out in terms of eligibility, or anything else that we could cover to make sure someone watching here knows what they need to do to ensure before they go put a house under contract that they are eligible?
Well, one of the favorite things that I like to tell people is that when we're looking for the creditable years of service, not every loan officer that you work with is going to know what that looks like. So what they want to see is that you have 16 points during that year. You get 15 just for signing up. So all you basically have to do is show up to drill or show up to your 2 weeks in the summer, and you're going to get at least your 16 points that you need. So it's not hard to reach that number. But not, like I said, there's so many people, because it's not very clear and specified in the guideline, like in the VA handbook, as to what constitutes a creditable year. There's a lot of people that just don't know that information. So, but it is 16 points. Like I said, 15 are just for signing on the line and saying that you're going to be there. And then you get a lot for showing up. If you show up at least once, you're going to get the one to put you at 16. But that's the biggest thing that I look for on my part. Like, if I get a point statement in, I'm going to go in, calculate my dates. I'm going to make sure that we have, 16 points at least for each year. And sometimes you don't. Sometimes things happen, and you'll see somebody and they were in for 7 years, but 3 of them, they only got their 15 points. And that's when, it's kind of a red flag, and that you're going to have an issue. And it either didn't get input correctly, like Sam, referenced, or they just simply didn't show up. So they're not going to be able to get time for service that they didn't show up for. So 16 is the number, the magic number there that you want to see minimum. But that's something that's kind of ingrained in my brain to look for right up front.
And the points are something that will be on the statement of service, or is that on the DD 214? Where are they pulling that info?
That's going to come from the point statement that they get from their command unit. Okay,
perfect. Now, again, if someone is no longer serving and they've gone on to the civilian life, and we are just using that normal income to qualify, really nothing different between that and a standard loan. What can we do income-wise to use some of the income that they're receiving from that to qualify? And a lot of times we get people that are tight on DTI, they generate some income from their reserve duty. What do we have to look at in terms of that documentation to make sure that we're good and calculating an accurate income? Because it's not generally like a job that we go punch clock every week and get a pay stub. Joy, what does that look like when you're going through that with the borrower?
So if they are currently in the Guard, I'm looking at W-2s, and we're talking about, we call them regular end-day soldiers. End-day. So end-day is they're doing their 1 week in a month, 2 weeks in the summers. That's end-day. All right. So regular end-day soldiers, we are looking at W-2s for the last 2 years. And then we're looking at their income earnings year to date from what they've received. The W-2 is important because it's going to add in extra income from AT in the summers. It's going to add in, maybe you did a training here or a BNOC there or whatever. And so it will add all the income you received from the Guard for the past 2 years. And then we can calculate it. It's treated like a part-time job. That's the reality. If you're a regular end-day soldier, it's treated like a part-time job. And so we have to have 2 years of it to count anything. And then we're gonna average it. We're gonna average it over 24 months. But the great thing is maybe you did a little more training 1 year. Well, guess what? That's gonna make your 2-year average higher, right? On the flip side, we've had end-day soldiers kind of lay off and not do as much training on 1 year. Well, then that averages differently, right? So it's considered variable income in some ways, but it's stable because you have a contract. So it's kind of the best of both worlds when it comes to like part-time income. The other thing though, is that there's also active National Guardsmen, or we call them AGR for Guard, and then Reserve is active reserve, right? So AGR income is much like your regular LES. It's going to have BAH. It's going to have BAS. It's going to have all the things that we're used to seeing on military pay. And it's calculated exactly like that if you're AGR. Now, also you need to have 12 months left on your contract. If not, do you have a likely continuance of this contract? Are you going to get to move forward on that? But the Guard has some unique opportunities. They're Title 10 orders. They're federal orders. They're renewed usually 12 months at a time. And so those are a very special case, and they're usually based on funding. The beautiful thing is that your commanding officer, or those people who put you in that place, your higher ups or your S1 or whoever, if let's say you only have 3 or 4 months left, but they know it's going to get renewed, we can get what do we call them in the military when we get a memorandum, right? A memorandum. So we can get a memorandum, and you can say PFC or sergeant or whoever it is likely to renew his contract or whatever. They have to have some assurance that this income is going to continue, just like a regular active duty member of the regular component.
But it sounds like it can be, like you said, a likelihood of continuance. It's not a written guarantee. It's just, yes, they are eligible, and our expectation is that we're going to move in that direction. You don't literally actually have the written guarantee that they're enlisted for more than 12 months.
Right. So the issue comes in, though, is when a lot of guardsmen and reserves will go somewhere else for these orders, and their families usually staying back. And so, living apart, there's all kinds of situations where it gets kind of hairy. And so you're living apart. Where's the Title 10 orders? If they're in DC, why are you living in Texas? That we have that happen a lot when I'm looking at things. And so it just doesn't make sense. Is it likely to continue? Can we reasonably assume that this income will be there for the foreseeable future? That's what they're asking. But it's called ADOS, and it's based on budget and mission for the Reserves on National Guard, ADOS.
And what I'm hearing is that this isn't as simple as your standard veteran coming through. A little more legwork on the front end, and maybe you don't get an answer. Like most of us, I'm sure you guys get the question, well, how quick can you get me pre-approved? Well, if most people, 24 hours, get me all your stuff. And if you really want to write an offer this afternoon, 2 hours, just get me everything. We'll go through it. But it may not be as possible to get that certain of an answer that quickly for some of these guardsmen and reserve members. Is that accurate? Michelle, in terms of income wise, anything from the loan side that you would add in terms of that process?
I've had some situations where things get a little hairy, I guess you could say, when you're dealing with the guardsmen and reservists. So like if you have somebody that has been activated on orders and that is their like primary income at that time, you can't always just use what their previous income was. They're going to look at what they're getting under active duty. They're going to look at what they were receiving from their employment. So we have an air guard base here. So a lot of these guys, when they're not, drilling and doing guard stuff, they're pilots and they make really good income. Well, when they're on active duty orders, they may not make quite as much. So it can be a little bit tricky as to how they look at that. Now, it's not always, this is another circumstance where it's not always just like, black and white on how it's going to be treated. But there can be circumstances where they don't let you use all of the income that you're anticipating being able to use because it is, if they're trying to use the guard pay because that's more while you're on active duty orders, they may not let you use that because they know that it's not going to be continuous. If you're trying to use your income on your that you were receiving from your regular job because it was a lot more than what your guard pay is, you may not be able to use that depending on how long your orders are for. So income can also be a little bit tricky when you're dealing with guards members, but it doesn't. I don't feel like there's been too many where it's like kept somebody from being able to purchase. It's just a matter of figuring it out and how you approach it and who the underwriters are that you work with and making sure that it all makes sense.
I have a question too. Michelle, so we have had a situation where, thank goodness, a lot of employers are more friendly to the reserves now. And so they will pay a differential on what their military pay is and then what the military pays. So it's a differential and they have it in their contract to where it's however much, and it continues as long as they're on orders. And we've had someone actually use the differential as part of the qualification. Have you ever done that? Like, how was the process for you? At first, honestly, it was not like incredibly clear. And I'll say, like, when I first dealt with that, I was not doing a whole lot of VA loans at the time. I was still fairly newer as an originator. Had a guy that was in the Guard, but he also flew helicopters for his civilian job. And he was getting paid that like shore up income, basically. And when I first sent it over to my underwriter, I was like, well, here's our income and here's this. And she was like, but what is this for? He's not working. Why is he getting this income? Because she wasn't even familiar with it on her end as an underwriter. So we had to get a letter from their employer stating what it was for, why he was receiving it. And we were able to use that, but that is something that's really good that some employers just they're great. And that really helps for those borrowers. I've had other borrowers that were just working, just kind of normal-ish jobs. And it's like they left to go on their orders and you're going to have a job when you get back, but they're not going to give you anything extra in between. But for some of those, like I said, they were also making more money on their active duty orders than they were at their civilian jobs. So we had to really take both of them into consideration because the active duty orders aren't going to last forever. But yes, I've seen that, Joy, and it's a thing. At first, when they first started telling me that their employer did this, I was like, what? No way. But yep, and the biggest thing about that, if your employer does that, make sure you get it. And you're trying to buy a house, right? If you're not buying a house, well, great, take the money and take your kids to Starbucks or whatever. But make sure you get that in writing, and you know how much it is, the frequency, consistency, and how long it will last. And that will really help you in your home qualification. They just want to see that it's stable and then it's going to continue. That's it.
Yeah.
That's one of the beauties of the VA loan. It's less hard and fast than anything else. And kind of what you guys are talking about, when something should be able to be used, if you can build a case for it, document it, get it from the employer, we should be able to use it if it's likely to continue. That's really what it most times come down to, that someone will say, well, I have this, this, and this. And you go, okay, well, that's not likely to ever come back again. We can't use it. But in this situation, if you can document it, make a good case, your employer supports it, you have a good chance for being able to use that. It's not a question, but we have a very nice comment here. Lisa Lee Stewart says, husband starting his 25th year in the Navy Reserve. Seems like we're going to be okay. So glad I found this Facebook group, getting ready to buy a house with a VA loan. First time using this benefit. Just wanted to make sure we're on the right track. So Lisa, you came to the right place tonight. These ladies have all of the information that we need. On that topic, I want to see what I have here. I think I do have it. Well, I at least have the banner with the map. If you stumbled across this, you're not a member of the group, go out to the Facebook group. Just search Vetted VA in Facebook. It is a wealth of knowledge and information. Vetted pros like this pretty much 24 hours a day, 7 days a week, there to answer questions. If you get down the wrong path, get painted into a corner, you can get honest, accurate answers without being sold anything. If you are looking for people with knowledge and expertise like these ladies are showing us tonight, go out to the map, vettedva.com, gives us a map of the entire country. Click on your state and we'll get you connected or show you a list of pros in your area who can help if you want to contact either a vetted real estate pro or a mortgage person. With the realtors, remember, coverage is a little bit more difficult with realtors and they are more local. So if you don't have someone super local to you, reach out to the nearest one to you on the map and they will help you find a local pro that maybe isn't vetted, but does have experience helping veterans. With that, Sam, I see you chuckling over there. You have something to add, or you just you telling jokes we're not privy to? All right. Well, again, this topic tonight is an important one. It's really deep. It's not super broad. So really, we've only been going about 25 minutes. You ladies feel like there's anything that we didn't cover that's important that you want to catch all, throw out there?
I mean, the biggest thing I can say is that if you are a guardsman or you're in the reserves or served in the reserves at some point, if you get a pre-approval letter from your loan officer, make sure they have pulled your certificate of eligibility, because it's not going to be fun if you get all the way through the process and then later find out that they can't pull it for some reason, or you're not eligible, or they need documentation that you're going to have to get from that you just don't have handy. And if you're going to have to go back to archives and request things, like, make sure that you've got that certificate of eligibility from your, and that your loan officer has it. You don't necessarily have to show up to them with it, but don't just take the pre-approval letter at face value. Just make sure that they've got your certificate of eligibility too. And I'll be honest, I found that out the hard way, which is why I'm a huge proponent of always pulling it up front. At one time, I had a processor who'd been in the business a long time. She was fantastic, but she usually didn't pull the certificate of eligibility until later in the process. At the time, I was kind of just too new to mortgages to understand that should have been pulled up front. And we had one that we got it in kind of, at literally the very last second is when we got the certificate of eligibility in, because we did need more documentation and it didn't pull in automatically. So don't wait. Don't let your loan officer wait to pull that, because you're going to have it, and it could take a little bit longer than normal.
You guys are all too young to remember this, most likely, but back in the 90s, remember when you literally had to go down to the VA to get your certificate of eligibility? No veterans had it. They had their DD-214. They could mail off for it, or they could go to the VA and try and get it quicker. So it really is a wonderful day and age of having the technology where we can go on and pull them, and 80-90% of the time get them back right there at a moment's notice. So hopefully your loan officer is doing that for you. Before we call it a day, why don't we usually go about an hour on this. We're only at about 28 minutes. A lot of the stuff that we get is just people wondering, where is the market at? We had an expectation in the fourth quarter, rates started moderating. Now we've had them run and turn around and go back up. We're into the spring, summer buying season. We did an episode about a month ago about getting prepared for that. But what are you guys seeing in your market? I know two of you in Texas. We got Michelle, you're in Mississippi, but what are you seeing just in terms of activity? Are there parts of the market that are hotter than others? What are you seeing, and what are the veterans that you're working with seeing in your market?
I'll talk if y'all don't want to jump in first.
I was going to let Sam go first.
Yeah, Sam.
Oh, I don't know. I might take up the rest of the time. No, I'm just playing. So
We might go the whole hour, Sam. We're going to let you. First half was Michelle and Joy, and then the second half is you. So go. It's your time.
So basically, in the Dallas-Fort Worth Metroplex, I'm seeing way more houses on market. Their days are longer. Sellers are still stubborn in regards to being, realistic about pricing. Even if the sad part is the comps can be there, but if the buyer's not willing to pay it, you're not going to get it. That's just point blank, period. They're going to pay what they want to pay. And right now in Dallas-Fort Worth, I'm seeing, shorter appraisals. So I've had 3 appraisals, 1 conventional, 2 VA come in low in the last 45 days. Even though the comps are there to support the value, because our market is shifting to a more stabilization thing. And it's even been worded like that in our appraisals. They're not going at max value right now on appraisals. Unfortunately, I've had 3 in 45 days. That sucks. That's not good for nobody, buyers, sellers, or anybody. But yeah, it's rough out here. Interest rate. I mean, buyers are still buying, sellers are still selling, but it is it's rough.
And is that primarily just due to the affordability? We've seen pretty big appreciation in the last 3 or 4 years. We've seen massive appreciation in interest rates, but just the affordability issues is primarily what's making things tough for buyers out there.
Yes. So Texas, our property taxes are, one of the highest among all states. And with high interest rates plus high property taxes, it can make the desirable homes less affordable to people. And so the non-desirable homes are what's sitting, but then the ones that are desirable, you can't afford them because the monthly payments are outside of your budget. So it's a hit or miss depending on the person's comfortability in regards to their monthly payments.
And don't forget the insurance in the DFW area.
Yes, insurance in DFW has gone up tremendously in just the last 6. How many months are we in this year? 4 or 5? I don't know. 5, going on 5. Literally, if you are shopping in the Texas market, doesn't matter which area, you need to get your insurance quote for the home insurance prior to going on the contract. So if you kind of know which area you want to be in, call an insurance rep, ask them what is a typical quote, just give them an address and have them run the numbers, because it is literally killing deals. Literally. Between that and property taxes plus the high interest rate. Yeah.
Because if there's something that people procrastinate on, it's the insurance, because they assume it's a formality. I'm going to get it. The premium's going to be what it is. I'll get it at the 11th hour. And yeah, depending on where you are, for us in Southern California, it hasn't been as big of an issue, but some of the wildfire areas, it can be a huge issue. So we want to tell them, just seriously, get it very, very early in the process so that we know that if there's an issue that we have to work around, that we have some time to deal with it. What are you guys actually seeing? Well, Michelle, for you in the Gulf area, if you're looking, the lots of areas throughout the country have been impacted by the insurance stuff, but everything through the Gulf states, Louisiana, Florida, I'm assuming Mississippi, Alabama, having the same things. Are you seeing big insurance premium increases because of the hurricane and wind and flood?
Oh yeah, massive. So we have a lot of bases along the coast of Mississippi, and so we'll have a lot of people that are PCSing in there. And that's one of the first things that I tell them when they get out to start house shopping is, don't assume that the insurance is going to be, in these quoted ranges that I'm giving you, because it can literally, depending on what side of the highway you are, which county you are, which city that you are, it can vary. I mean, it might be $1,800 over here and you drive a mile down the street and it's $5,000. So that can make a huge impact on their monthly payment. So they have to be cognizant of it. And I talked to them about that up front so that it's not a surprise. But when you've got some of these areas and, the windstorm coverage cannot be included just because of where it's located. And then you've got flood insurance on top of that. I mean, you can have some areas where your insurance is more than your principal and interest, and that's just doesn't make sense, especially for a lot of our, for our VA borrowers. So I try to let them know up front, let's go ahead, and get these quotes. But if you're looking below US 90, your insurance is probably going to be pretty outrageous. So I try to give them a heads up on that, and then just make sure that they're working with a knowledgeable, realtor like Sam and any others that's going to be able to help advise them through that as well. Because somebody who's only doing a few transactions a year, they may not realize just how much insurance has either changed or how much the area, can impact that. But we've got great agents here in Mississippi. We've got so many veterans along the coast that, that most agents down there are familiar with their loans and what we're going to need. But yeah, you can't wait. And in the process, you got to get those quotes. And if it's a house that you really love and you're not sure, I'll tell them, go ahead and just get a quote and see what it would look like. Because that may help you determine what you want to do. Had a borrower just the other day, and they had two houses that they were in love with. The insurance on one was $3,500 more than the other, and pretty much everything else was all the same. So they didn't go with that house. But yeah, you just got to have the conversations and educate them and let them know. But aside from that, though, market-wise here, it's picking up. Like, it's busy. It's kind of surprisingly shocking how many people are still continuing to buy in this market. But one thing that's really great, though, is that a lot of my VA buyers are starting to see seller concessions increase again, which has been really helpful. So we're starting to see a lot of that in Mississippi. Sales prices, I wouldn't say that they're really coming down a whole lot. In some places, they are a little bit, aren't really having an issue with short appraisals yet for the most part. Did have one last week, but that's been the first one in a while. So stuff's still appraising. We're just starting to see more concessions again, which is always good since VA is so friendly with those. But people are buying. It's not stopping them, especially when you've got to have a house. And when you're PCSing, like if you're coming to Camp Shelby in Mississippi, there is no on-base housing. So if you don't want to rent for the next several years, then most of these people are looking to buy. So they just unfortunately have to take what it is right now as far as the rates go if they do want to buy. And thankfully, that VA RL is there. So it doesn't mean just the rate that you get today doesn't mean that that's your rate forever. But the market's, it's busy. It's rocking and rolling here.
What's the average purchase price for, middle income family in Mississippi or a veteran, let's say an E6, E5, E6?
Well, I can tell you just because I was looking at some numbers the other day. So my average loan size last year for just across all VA loans that I did was like $315,000.
Okay.
I would say,
Sam, can we find anything in DFW for $315,000?
Not unless you go to new construction, and most of our pre-owned homes, anything at our average sales price right now is around $450 for move-in ready.
And this is not, Sam, correct me if I'm wrong. This is not your 3,000 square foot.
No, it's like 18 square feet, 15 square feet.
Okay.
Like it's in that range.
Okay. So that's kind of a starter home in DFW.
Yeah.
Okay.
And now I would say in like the city that I am in, our average sales price is probably around $370, $380. We have a lot that's, higher than that too. But in years past, like if you went back 10 years ago, 20 years ago, housing prices in Mississippi were actually a little bit more than they were in Texas because there were so many houses in Texas. Now there's so many people there, and just because there's a shortage everywhere, y'all have just raced past us. So it's healthy-ish here, but there are, like, along the coastal areas, there's definitely, like, you can get into a good home for, $250,000, $265,000, $280,000. So there's some stuff out there that's still, affordable. And that's a nice home down there. It's not, shoddy or in, parts that, like an old house that's fallen down or anything like that. But so you can still get some really good homes in Mississippi for a good price.
What is your general tax rate in Mississippi, Michelle?
So there's not just a standard. So every county has their own millage rates. Typically, I will use around 0.75% of the loan amount.
You just blew the Texans' minds. They don't know what you just said.
No, but we have state income tax. So, but I don't feel like our state income tax is anywhere near what y'all are paying in property taxes.
No, ma'am.
We
have the 100%.
Our average is
disabled veteran
2.8
exemption
across the state of Texas. 2.8 tax rate.
I think
and so my primary market in El Paso, which was, I was going to chat about that, we have taxes. It makes me sick saying this, up to 3.2. And the values are increasingly becoming closer to market value when they're valued. And used to it in Texas, if you had maybe a higher tax rate, they would value it a little bit lower than market. And so it would kind of ease the pain a little bit. But now, it's on like Donkey Kong, apparently, with the appraisal districts. And so in El Paso, what we are seeing as far as that market is concerned is certain areas, they're having multiple offers. They're going a little bit above asking in certain areas, especially on the west side of El Paso. On the east side, there's a whole lot more construction. There's more land. So you can get a new construction over there, get your closing costs taken care of. But on the west side of El Paso, in certain zip codes, they're in bidding wars again. It really just depends what price point. Resale homes in El Paso are coveted if the backyard is done, because someone could sink $50,000 to $100,000 in their backyard. And we're not talking about $1 million homes, y'all. We're talking about your regular $250,000 to $350,000 home. And it's because your backyard is sand. I know that's crazy, but your backyard is sand. And so it takes money to make your backyard really somewhere you want to be. So El Paso is still moving, still going, but those property taxes have more than once had a borrower, decide that they didn't want to live in certain areas because there was a mud or there was, extra taxes on top of just the regular tax rate.
Let me ask you Texans this. Do you have an issue? So I went and visited a buddy. He's in Fort Worth. We went and saw Midland at Billy Bob's, hung out with him for the weekend. He has a really cool new construction condo. It's really a giant townhouse, 3,000 square feet, beautiful house. And it's like less than half the cost of mine. He goes, "You're stupid. Sell your house, come here and you have this." And I go, "What's your taxes?" And it was about what you guys said, about 2.8, 2.9. He goes, "Yeah, but we have no state income tax." So I look at it and I go, "That's awesome. I'm 50, peak earning years. That's going to save me a lot of money, more than what the property taxes are going to be above and beyond mine." So I'm like, okay, that's a win. Do you guys see people hitting retirement age when their tax bill is going down? They don't have as much taxable income, going, "Hey, I need to move to a state that might have a state income tax, but has more manageable property taxes to get away from that"?
From my experience with my clients that of the retirement age, because our counties allow for certain exemptions over 65, you can either defer your taxes or lower them based off of age. And then they have disability exemptions and stuff like that, even for civilians. So not per se, because you get all these extra exemptions once you hit that 65 and older.
Well, tell me more about this deferment. How do I defer my property taxes?
Yeah, so that is the golden ticket, but a lot of people don't want to do that. Sam, do you want to do this one?
So the only thing that I know about the deferment, because it happened with my stepfather's property, is if they defer the property taxes, once the property is sold, then you have so many years of back taxes that you have to pay out once the sale happens. I think it's 4. Joy,
From my understanding of reading the rules, you pay the back taxes, because what happens is, okay, you're 65 and your spouse needs to at least be 55. Okay. Because there's a thing too, guys, where, okay, maybe a spouse dies, it's still deferred until this other spouse passes away. So y'all, people are living longer, So if you start this when you're 65, I mean, it could be 20 years. It could be a while. So what most people are concerned about is obviously the tax levy, because there's a 5% interest on it every year, interest that accrues on it every year. And but again, it's at a reduced tax rate, right? So from my understanding, you pay what is owed on a tax lien, essentially. Now, whether that's 5 years, 4 years, I'm not quite sure. I would need to look that up. But I do know that it accrues a 5% penalty every year, but it is deferred until death, and it can be deferred until a spouse's death, as long as the spouse is 55 at the time of exemption.
But
But
it's kind of like a reverse mortgage for property taxes.
well, because here's the thing. Think about it this way, because I hear this all the time in Texas. Like, I love my home. It's paid off. I love my home. It's paid off. I'm in good health, all that, but I can't afford the taxes. So, for example, we've had homes in Texas, and the property taxes were $18,000, $24,000, $36,000 a year. Now, these individuals were higher earning individuals. Okay. I'm not going to pretend this is a $300,000 home. These are homes that are now worth $1 million. But guess what? That person owning a $500,000 home right now, that home could be worth $1 million in 10 years. So we have to get this through our heads. What happens is their earnings, they go down, they're making retirement or whatever, but their taxes crept up, and then their taxes are frozen, and then they have their exemption. But that could still be $1,000 a month. $1,000 a month in retirement is a big deal. Okay.
Yeah.
So it helps people age in place. Whereas if they were paying the taxes, they wouldn't be able to age in place. They would end up selling. But the other problem is, where are they going to go? Where are they going to go? It's expensive, right? So that's just one way to kind of give mom and dad back their nest egg in retirement. Versus them just holding on to the property or to any kind of perceived savings or any equity. I tell people this all the time. Here's the deal. You're going to be gone when your family has to settle this out. You enjoy yourself.
Something that you just listening to you guys talk, different parts of the country, a couple of things popped into my head. I had some clients move from San Diego, California. It's probably 5 or 6 years ago. They had a beautiful house in San Diego for like $300,000 less. They got twice as beautiful a house just outside of Houston. They were shocked that their $80 homeowners insurance in San Diego became $400 a month where they were there in Houston. And they were shocked that the property taxes were like $3,000. It was absurd what it was. So when we looked at it, the move was, hey, this is awesome. I'm getting a $300,000 or 30% cheaper home, and it's twice as nice. But then we look at it like they were only ended up saving like $1,000 on the monthly payment. So a lot of the people, if you're thinking of moving to some of you want to move to Boise, you want to move to Dallas, wherever it is that you want to go, make sure you're talking to pros there. Talk to a realtor, talk to a mortgage professional, run these numbers, because you might kind of get shocked that the savings that you're expecting there are not as good as they otherwise would be. And then those income taxes come into play there also. You need to talk with your CPA and see how much is that lack of state income tax going to save me, and what does this look like at 65, 67, 68, whenever I am actually ready to retire. And I guess sort of the last thing, Sam and I were talking before we came on, I did an interview with Lance Lambert at Resi Club Analytics, and he has data all the way down to the zip code level across the entire country, which always brings me back to all real estate is local. And we don't just mean, hey, you guys in Texas are different than Mississippi, than different than me in California. Even the map, if you drill into Texas, some cities are on fire. Some of them are not. So you need to know, If I'm not just going to a state, I'm going to an area and know what that looks like. And again, gets back to dealing with real estate and mortgage professionals that are boots on the ground, dealing with people there on a day-to-day basis, can tell you what you're actually seeing. Because for us here in Southern California, market's nuts. Everything is multiple offers. One of my agents, the last 3 listings he's had, they've had at least 4 all cash offers, and these properties are all $1.3 million to $1.7 million. Like, who has cash like that? I don't know. I don't know the answer, but there's a lot of them out there. And these aren't, you guys talk about an entry level home being 300, 400, 500. These homes are just above entry level. They're like, it's your first move up from your entry level home. They're nice homes, but I don't know if it's wealthy parents helping their kids with cash, but it's that kind of a market. But just you go to the Bay Area, and it's a little bit overblown of how weak that area is, because I have people in San Jose or Sacramento, but you go to the north, it's not nearly as hot as what we have here. And if you look at that map, you can see the Northeast is crazy. Everyone, Boston, Philly, New Jersey, they're like, it's 20 offers on a property. So don't read the national news and go, I hear prices are up. Well, we got the numbers today. What Case Shiller says up 6.4%. Well, if you're in Austin, do you care that home prices were up 6.4%? No, you know they're down, and you want to talk to your pro saying, in my price range, what does it look like? A report that I get here in Orange County, California, guy just dissects the MLS data, and he said, here's the deal. You see that we have like 20% more inventory and 5 more days on the market. This is cool. That's helpful to you if you're buying a $2 million home, because that's where the inventory is building up. If you're trying to buy something under $1 million, we have less of that inventory and is going up faster because there's so few of them. And that's where the activity is. All of the buyers are entry-level buyers wanting to get into the market. So long way of saying, it is very important to get the data on your area and get pros that can guide you on what is going on in your area, because you don't care about the rest of the country. You care about where you're buying. So we don't want to give this guy the last word. So if you have anything, we're going to go around the horn, and any last bits of advice just in general on the market, back to Guard and Reservists, anything that you ladies would like to share, we're going to give Sam the last word. So Joy, that means you get to lead off.
So number 1, if you're ready to buy a home, you're ready to buy a home. If you're not, don't do it. That's the biggest key. Second, Sam said this earlier, but if you're a guardsman or reservist and you cannot find your paperwork and you're having issues getting it, please go to a recruiter. We've had multiple issues like this happen. So go to a local recruiter and they can help you.
Michelle?
I'm just going to say back to what I said before. Don't just take somebody's word for it that you're pre-approved. Make sure you have your certificate of eligibility. So.
I like it. All right, Sam, you get the last word. We always give you the last word, whether we give it to you or not. Sam always gets the last word.
She's worth the wait, y'all.
Oh,
Yeah.
no, just playing. Agree with Michelle. Go pull your own certificate of eligibility as well. Don't just depend on the loan officer. Make sure that you are staying within your budget. Don't go outside of it so you don't be house poor, and be great.
I like it. All right. Well, appreciate you guys joining us. It was interesting. We kind of got to go a little off topic and go a little bit more into locally what we're seeing and some of the issues that people are seeing around the country with both property taxes and homeowners insurance. So appreciate you guys being here and sharing your knowledge. Every week we have a topic that requires a lot of knowledge, but this one was very specialized and you guys gave a lot of important, detailed insights. So we appreciate it. We will be back next week with 3 additional vetted pros. Would love to see you here. If you're looking for help, either go out to the Facebook group, go out to the map, find a pro to get connected with. And if you're not already following Vetted VA on YouTube, go out to the YouTube channel. Definitely trying to grow the presence there and putting up additional good content. So again, ladies, thank you for all of your knowledge and insights. We'll be back and see you guys next week.